Hello, I welcome you all to my channel. Today, we are going to discuss share market investment in a very simple way. My name is Dr. Rahul Vasantrao Bharad. I am a neonatologist by profession. Here, I am presenting this lecture just to share my experience in last 4 years in the share market investment with you all people. I know I am not a financial expert, and whatever points I discuss here, these points will should help you people to make a correct decision in your future investment with the help of your financial expert. So let's start today's discussion. I'll share my PowerPoint presentation for your convenience. So today when I'm recording this video on 22nd of December 2022, I'm I've almost finished 4 years of active investment in direct investment in share markets, and we are here to discuss my experience and my learnings in the share market in last 4 years. So the topic name is share market investment in a very simple way. I will not be discussing very hi-fi things here in this lecture. Whatever basics are required to enter into the market, we will be discussing in this presentation. First of all, disclaimer, I am a doctor by profession. I am not a SEBI registered financial expert. I will not be guiding about share market investment directly in this discussion, and here only to share my experience and learnings over the last 4 years for helping newcomer enter into the market. Like there are so many people who need some trigger point to enter into the market. They have so many questions in their mind. They don't know whom to ask these questions. They don't know where to search these answers for these questions, and then they might commit many mistakes which a newcomer should not be committing when they are entering into the market. So I'm here to keep you away from those mistakes, early mistakes which you may make while entering into the market. If you have been investing into the market actively since many years, or if you are a professional investor in the share market, this lecture is not for you people, because you may be knowing more things than what I'm going to tell you here. But I know most of the people who are not from commerce background, they need some expertise, they need some guidance when they are entering into the market. So this video is basically to help you and to make sure to answer your many queries and to make sure that you enter into the market with a confidence and with minimal mistakes or no mistakes. So we'll start our presentation. What is share market? The share market is a place where the trading, it's a trading place where the trading actually happens. So what is trading? When a company dilutes its share and makes some part of the company's shares available to the people, it brings initial public offerings. It is called IPO. You may be knowing these days IPO word is very trending. So IPO is nothing but initial public offering. That means some part of the shares of the company which were owned by the initial investors and owners of the company are diluted and they are made available to the public so that they can trade on it. Once the IPO is available, once the shares come in the secondary market, you and me, not like owners of the company, but you and me can buy those shares. Now, what are the things which decide the share price of that company? It is decided by some investor banks, and it is based on the profits and whatever market capitalization of that company is initially. For example, If I say a company brings its IPO with a IPO price of 100 rupees, then if you feel that company is worth, that share is worth 110 rupees, then you are going to buy that share because you know that it is worth 110 rupees, not at 100. So it is cheaper for you. If someone is thinking that 100 is not so good price for him, and he wants to sell the share at 100 rupees, who has invested initially during before IPO in that company through other routes, he may like to sell that share at 100 rupees. So basically, share market is a place where a buyer is available and a share seller is also available. So the place where this trading happens is called stock exchange. There are two stock exchanges in India, Bombay Stock Exchange and National Stock Exchange. You may do trading and investing at any one of these platforms. You may prefer BSE or NSE. It doesn't much. It doesn't make much of a difference in trading. So, what is history of share market? As we all know, in 1875, Bombay Stock Exchange was established. It was one of the first stock exchanges in Asia, and since then, it is working very smoothly. All the trading is happening there. There were earlier many other exchanges also which have been closed, like Calcutta Exchange and all. Even at Delhi, there was exchange. But now there are only two exchanges currently active in India, Bombay Stock Exchange and National Stock Exchange. In 1986, Sensex was launched. As you all know, Sensex and Nifty are the two most important indices of share market in India. That means they will indicate the strength of Indian economy. Whatever top companies are performing in India, it will be reflected by the price of the uh, Nifty and price of the Sensex. So uh, then Sensex, Nifty were traded. Now also they are traded. The companies also making them are somewhat evaluated valuation wise better than other companies. So it is privilege for any company to enter into the Nifty of India like that. Now next factor is human behavior drives the market. Now how it drives the market? For example, if someone is buying a share at 2500 rupees and someone is selling the share at 2500 rupees, the view of that person towards that price is exactly opposite for these two people. A person who is willing to buy at 2500 rupees share thinks that it might go up to 2600 or 3000 like that. That's why he is buying that share. And a person who is selling that share may be having a view that the price of the share is going to fall down because of some reasons, whatever he thinks. And he thinks that suppose the share is going to go up to 2200, then he will try to sell that share at 2500. So a person who is thinking at 2500 same level to buy the share, and another is thinking to sell the share. The person who is selling the share might have bought the same share earlier, for example, at 1500 rupees, and he wants to sell the share at 2500. So, all these human behaviors drive the market. When a market share price goes up, that means people want to have that share at even higher prices. And when the share price falls, that means people are not interested in that share at a higher price. That's why they have sold the share and the price will come down. So this is how fluctuations in the share market price happens. Now, how to gain more? Desire is the ultimate thing. Everybody who is entering into the market is here to gain some profit. So everybody who says that I want to gain more from the market, he will either sell the share or buy the share. but the ultimate aim is to get profit from the market, becoming easier day by day to enter the market. As we all know, earlier the share market trading was happening into the ring of stock exchanges. Actually, people used to buy and sell the share physically while going into the ring of the stock exchanges. Now, we don't need to go there personally, physically. We can just buy a share electronically and it is settled in our demat account. Now, what is demat account? I'll be telling later. And we can sell the share just like we bought the share electronically with a mobile screen, a mobile touch. We can buy and sell the share. So it is becoming easier day by day to enter into the market. What are consequences of it is more and more people are going to enter in this market. Earlier, it was restricted to only those people who can go physically to the stock exchange and enter and invest their money into the share market. Now, even a person sitting remotely in a village with his mobile or her mobile can invest easily into the share market. Once he invests something into the share market, he has actually entered into the share market and entered into the this trading and all. So, what is better, self or financial advisor? I would personally suggest that initially, when you don't know anything, you should take expert guidance, take help of your financial advisor. It is all the way very necessary to get proper knowledge if you don't have. For example, if you know nothing about the cricket and you want to play cricket in a match and you straight away go to the ground in a match, if you try to bat, you will not be able to hit even one run or four run with a proper method, because there should be someone to teach you how to hold the bat, how to field the ball, and how to how to do bowling in cricket. Similarly, if you don't know anything or if you know very less, please try to get advice properly from financial advisor. Once you practice it well, once you are very sure that whatever I am learning, I am able to retain it, and you get enough experience of that, then you can put that experience into the account, and then you can say that I am going to apply it, and then you can do it selfly. Till then, it's better you take help of financial experts. So this is all about basic share market questions you will have. Now, once you enter into the market, there are many, before entering also, there are many questions. Or while entering also, you have many questions. First is, if it is risky, should I enter into the market? Now, every good thing also has some risk. For example, if you go by two-wheeler on a road, there is some risk. If you go by four-wheeler also, there is some risk. Even if you go by truck, there are some risk. So you can't say that there is no risk. Once you enter into the market, there are bound to be some risk associated with the share market. Our aim should be to minimize that risk, to gain more knowledge. And once we gain more knowledge and experience, our profits will increase. And then you can say that market is helping me and market is not a gambling. So there comes the second question. What if I enter into the market like a gambling? You will most likely suffer, because it is not a gambling. It's not that you will randomly select a stock at random price and it will shoot up someday. There is some logic behind buying a stock. There is definitely a logic behind selling a stock. If you feel market is going to down, you will sell a stock. If you feel that price of that particular share is going to rise, you will buy a stock. This is the simple principle, and you must follow. You must have sufficient evidence, sufficient knowledge of that share, company, and the scenario revolving around that company to decide whether to sell or buy a share at a particular price. Now, what is demat account? It is nothing but dematerialized account, similar to bank account. Like you can do transactions of money from your bank account. You can do transactions of shares through demat account. Now, demat account is the one where you will transfer your money from bank account to demat account. From there you will buy some shares through your brokers, and once those shares are there in your demat account, you can sell them whenever you want. And if you sell those shares from your demat account, you will get profit or loss depending on what level you sell those shares at. From there you can put money in back into your bank account. So demat account is nothing but dematerialized account. Now, how much money is needed to enter into the market is the next question of many of the common beginning people. You don't need more than 400 500 rupees also to open a demat account and to enter into the market. It is not like you need 1 lakh or 10 lakh rupees to enter into the market. That is the beauty of share market. Even a small investor with 100 rupee note can buy a good company share with those 100 rupees, provided you don't go for penny stocks. I'm not recommending you to buy penny stocks, but what I am saying is even some good companies are available at cheaper prices. Not necessarily every company which is very good should have a very high price of 10,000 and 50,000 or 40,000 rupees like that. To open a demat account nowadays, it is very easier, and you hardly need 200 to 300 rupees for opening a demat account. Now, what is long term and short term investment? In India, if you invest a stock into a stock and sell that share after 1 year, it is called long term investment. And if it is sold before 1 year, it is called short term investment. So, as a newcomer, I would always suggest you to go for long term investment. See how a share price moves, see what changes in the company make what changes in the share price, how fluctuations happen in the share price of that company. Then you will get some idea about the share market. So even if you buy a single share of a company, it can teach you whole scenario of that company in that 1 year, like that. Better you don't go for short term investment ideas like intraday and future and options initially, because they are very risky and they need expertise, knowledge to get acquainted with them. So till then you feel you are expert, I would not at all recommend to go for intraday and future and options. Initially, you can do long term trading, get well versed with the share market. Once you are getting sufficient knowledge, you go for a short term investment if you feel. Now, tax issues, tax implied on gain occurred by selling the share are definitely more in case of short term investment, and short term, long term gain taxes are very less. So better you go for long term investment so that the taxes incurred on you will be less as compared to short term capital gain. Now, mutual fund versus direct investment. What is mutual fund? Mutual fund is nothing but a financial expert of a particular company. For example, ICICI Bank or HDFC Bank or SBI Bank will prepare a portfolio based on their expertise of suppose 50 companies, 100 companies, and they will invest very small amount in each of them. In some of the mutual funds you can even start with 500 rupees. So if you invest 500 rupees in that mutual fund, that means those 500 rupees will be invested in those fixed 50, 70, 100 companies with a small amount, and they will keep churning those companies. If they find 5 companies out of those 70 companies are not performing well, so they will remove those 5 companies in next quarter, and they will add some other 5 companies, good companies they feel, in those their portfolio. So what is advantage with mutual fund? That they are safe. Even if a company is not performing, you don't need to keep a watch on that company. If you feel that, if you are happy with the initial portfolio assessment of that mutual fund, you can straight away invest through mutual fund. What is direct investment? Direct investment where you yourself do analysis with your own knowledge, with your friend's advice or someone expert known in the share market, and you buy that share. Here in direct investment, you yourself have to keep a track of that company, because nobody is going to tell you what is happening with that company and what might go wrong in that company. So I'm not saying direct investment is not good. I'm just saying initially you focus on mutual fund investment. Once you are well versed with the share market, you can start your direct investment also. So both have their pros and cons, definitely. Other investment versus direct investment, many people are used to ask what is better, share market or bank FD. Bank FD gives you returns only by investing your money itself in the share market. So if you yourself do share market investment directly, that is going to definitely give you better returns than bank FD. If share market collapses, even bank FD returns will also come down, not only share market. So don't think that FD is all the time safer. No investment is safe if you are investing in the market, be it share market, direct investment, be it mutual fund, or be it bank saving investment or FD also. So everything has its pros and cons. Now, once you enter, there are some do's you should follow. First is regular follow. If you are invested in the share market, do regular follow up of your portfolio. Do not hesitate to keep a track of your portfolio. Why a certain company is going down? If it is going down, shall I buy more? That is also another question which should come to your mind. If it is a good company and if share price can go, it can happen that share price can go despite company performing so well, or share price may not move much as you expect even after performance of the companies even expect more than expected. So in that case also you should think, shall I buy more of this company? So keep a regular follow-up of that company. Not necessarily you should track your portfolio daily, but keep a regular follow-up of your own investments. Second is health and life to be managed simultaneously. Once you enter into the share market, do not lose track of your health. Keep continuing your healthy habits. If you are exercising, do not stop your exercises simply because you have entered into the market and you want some time into the share market. Or do not compromise your life goals if you are investing into the share market. That is one advice I would like to suggest you. Third is add on good stocks on corrections. Corrections do happen. They will happen over a period of time. Many good companies, almost all good companies will have a downturn someday or the other, downtrend someday or the other. At that time, you should be ready to put money into a good company if you are very sure that the company is doing well, and you should put your confidence into the market by buying more shares at a cheaper price. For example, if a company was trading at 100 rupees and now if the share price have fallen in last suppose 6 months up to 60, if you buy that share again at 60 rupees, the amount you have invested is 160 because previously you bought at 100, now you are buying at 60 rupees. So amount invested is 160 rupees and you have two shares with you. That means now your average price is 80 rupees only. Earlier it was 100 rupees. So at 100 also you were ready to buy that share because you were thinking that share price is going to go up to 150, 200 like that. Now once your average share price is 80 rupees, your future profits will be more. So if a good company is good, do not hesitate to put your money more into the same company like that. Then open your eyes around the surrounding things. What is happening around you? You should keep a track of it. For example, if you go to a grocery shop and you think that Britannia biscuits are very good since you have taken them since your childhood, it's very good to taste, you assess Britannia company. If you go to a grocery shop, you feel ITC products are more, Hindustan Unilever products are more, or if you go to a bank, you feel that some particular ICICI bank is very good or SBI bank is very good. You come back home, do your analysis of SBI bank, ICICI bank, HUL, ITC, Britannia. Once those shares come at a fair price as per your knowledge, you try to buy them. So the previous knowledge you gained about those company when you were curious after going into the grocery shop or after going into the bank will help you to make a correct decision when you have corrections. Otherwise, if you don't study when you go to a grocery shop, you will just simply give money to other people who are investing in those companies. If you don't invest in the share market and you go to a grocery shop, you buy a Britannia product, that means you are simply giving your money to those people who are invested in the Britannia company, who have bought Britannia company share. This is just example I am saying. My aim is to tell you that keep a very close eye, keep a very particular view towards what is happening around you people. Third, later on, the point is observe, observe, observe. Everything you should observe. When you are driving a car, what company cars are more on the road? When you are going traveling, what flight your company is taking you through aeroplane? If you are going by train, if you are going by road, if you are going to grocery shop, you just need to observe. I'm not saying you invest in this on the same day when you observe. I'm just saying you observe what are the things happening around you. If you can do that properly, it will be of great help, and it will make you more convinced about your decisions when you are wanting to invest in that particular company. So last is have faith. Without faith, nothing will be possible. If you have faith properly, you will invest more. If you don't have faith in India, if you don't have faith in Indian economy, if you don't have faith in Indian people, better you don't invest in Indian economy or Indian share market, because without faith, you will not be of the opinion that this share price will go up, or overall index of the India like Nifty and Sensex will go up. When the Sensex was started, it was around few hundred, around 100 rupees. Now it is 60,000, above 60,000 like that. So over the period, India will definitely grow. That is for sure. Nobody is having any doubt about it. How fast it happens, when it will grow to a particular level, is a matter of question. But you should have faith. Once you have faith, do not hesitate to put your money into the share market. Now, a few don'ts I would like to discuss with you. Never be in a hurry to become rich. Once you start investing, you will get many ways, you will learn many ways unnecessarily to earn the money in share market very fastly or very hurriedly. So do not follow them. Never be in a hurry to become rich. If you are not in a hurry to share and become rich in the share market, and if you just put some money and you are ready to wait, wait, and wait, I'm sure you will definitely get success in the share market, and nobody can keep you away from the success. Once you go for short term things very fast without proper knowledge and experience, there comes the problem. So never be in a hurry to gain more profits and become rich in the share market. Next is never trade without valid reason. If I buy a company, I should have some valid point in my mind which is explainable to at least myself. That may be fundamental point that this company is going to do well. That may be a technical point that uh, technical analysis of the share market is saying that this price will go up. There must be valid reason. If you don't have valid reason to invest in that share, do not put that trade into the action. Do not do trading at that point. Your mind should be satisfied that whatever I am doing is actually satisfactory level of explanation for myself to invest in that stock. Do not invest simply because someone has invested or someone has told you, or simply without a reason. Do not invest. Then avoid short term trades till you get enough knowledge. That's what I have been discussing. Short term investment must be avoided initially in your career. Do not invest with essential money you have. First, make sure you have proper health insurance. Make sure you have proper term insurance. Once you have all this, then you can think of putting the extra money into the share market. So Make sure your life is well settled. Not well settled, I would say basic needs are completed. Then the remaining money you must put. It is better to put those money into the share market directly or mutual fund rather than keeping it in the savings account and getting less profits out of that. Do not deviate from your passion. If you are a marathon runner, keep continuing your marathon. If you are a good cook, keep continuing making good dishes. If you are a teacher, make sure you continue your job with full passion as before entering into the market. Don't let your passion get diluted with the entry into the share market. Share market is a place where you, once you do some research and some analysis, you don't need to see the share market each and every day to get excited and to get depressed. Otherwise, it will make your life uneasy. So, my learnings throughout the last 4 years from this share market, I would like to tell you, if you are liking this discussion, whatever share market discussions we are having, please like my channel, share my channel, and subscribe to my channels. If you are having some doubts, I can clear. If you feel that I can clear, or if you are not sure with whatever I have told, please get consulted by your financial expert. You can discuss some points if you feel in the comment box also. So these are the learnings what last 4 years what market has taught me. Slow and steady always wins the race. In share market, it is said that if you are peaceful, if you have lot of patience, and you just invest in a company and sit tight on that company, you will definitely get good results. If when you in future you will get good results in 5 years or 10 years or 15 years, nobody knows, or even 2 years, nobody knows. But if you have confidence, don't get deviated from that confidence and that conviction which you had while investing into the share. You never know which of your selected stock will outperform, so invest as per conviction. Suppose you have a very high conviction on SBI, which many people might have, and SBI price has come down heavily, which is very easily available nowadays to see from where what level share price has come. If you are very sure about the share, if you know that price is very cheap currently, and if you want to invest much of your amount into the share. You never know which share will outperform your expectations. So if you invest in suppose 10 companies and 15 companies, nobody in the world can pick initially that this is the company. I'm telling you that this is going to be my multi-bagger. Multi-bagger means the share which gives you many fold returns, many times returns than your investment. So don't think which share will be multi-bagger. Just invest as per your conviction in that share. Nothing is easy in life, neither in the stock market. In share market, it is not easy to pick up good share. It is not easy to pick up at a particular cheaper level. Similarly, in life also, nothing is no good thing is easy. You have to put lot of effort. So you should be ready to put effort in gaining knowledge. You should be able to put effort in gaining more experience, but not bad experience. I'm saying you learn from your mistakes, but don't create too many mistakes in the initial period of your career so that you get deviated from the share market because of your own mistakes. So don't go for losses initially. Initially, your focus should be to only be profitable, not at loss at any cost. Then big corrections are not rare. Be prepared, as we have seen in 2022, uh, 2 years back 2020, we had massive fall in the share market prices of many shares, and that was a big correction. So sometimes things go wrong, things go out of the way, out of control of the people. In those conditions, we call them as big corrections, and then many good companies will be available very cheaply. So be prepared for those cheap big corrections and be prepared to buy good company shares in such corrections. Those people who had bought the share in those corrections in 2020 are very happy right now after 2 years that they stayed with the market, and now they are getting many profits out of that. So those people were in fear in 2020, and they got deviated from the share market. They lost their money. Plus, now they are buying the shares at a higher price than what they would have bought at 2020. Next is stay away from fake news. The real world is very different. You might have seen this. Many news is many news flow throughout the day night amongst so many social media nowadays, so many channels, so many discussions, so many tips you may get. But the actual company, the actual world goes very differently, and your focus should be to learn from the actual company profits and losses, actual company products, whatever customer satisfaction that product is giving to the customer is important for me rather than what share price is. If you are very sure of the company, if you are very sure of the promoter, the owner of the company group, if you are very sure of the future prospects of the company, and share market news are telling you something different, then it is actually opportunity to enter into the share and buy that share at particular level. That was the time when for which we were waiting for many years like that. So keep an eye on what veterans in the market are doing. In 2022 August, we lost Rakesh Jhunjhunwala, who was a very great philosopher, great market leader, and great market analyzer, I would say. He was guru to many people. Similarly, what Vijay Kedia is doing, what Ramdev Agarwal sir is doing, and what Sharma sir is doing. So these experts have not become experts in a day or two or a year or two. Vijay Kedia sir is also expert. These people have spent 30, 40, 50 years of their life in the share market. So they are not here to bluff you. They are definitely here to tell you something, teach you something more on the share market. So keep an eye on what they are saying, what they are doing, and what analysis they are doing, how they are analyzing a company. That we must learn. Next learnings I got from the market is big players move the market and not you and me. For example, if a share price is moving too much in a period of suppose 2 days or 3 days, it is definitely either up or down. It is definitely not because of someone like you and me, small person is buying or selling. It is definitely by some big institute like LIC, like Morgan Stanley, or like big mutual fund houses like ICICI Mutual Fund, SBI Mutual Fund, HDFC Mutual Fund. So big players, they move the market. Whatever amount we put in the market will not move the market by much. Whenever a big correction happens or whenever a big jump in the share price happens, it is definitely to be kept track of, and we cannot ignore what big players are doing. Suppose if you are doing opposite to what big players are doing, you are more likely to suffer losses. If you do your trades in line with the big players, you are more likely to get profits from your investment. So these are the some of the learnings I got from the share market out of my 4 years experience. So whatever we have discussed, I would like to say thank you for all of you. If you have liked all these discussions, please like, share and subscribe to my channel. Thank you.